Good morning and welcome to this weekly market update from MRC Markets. Today's the 27th of August 2014. What we'll do today is go through some technical analysis on Euro dollar, cable, dollar Swiss, Aussie and gold. Just going to review what happened in the markets last week and give some sort of outlook for this week. Normally do these videos on a Monday, but the UK bank holiday this week and it was generally quite quiet yesterday, so I thought I'd do it today. For any new followers out there, we have 3 moving averages in each chart to represent a 50 simple moving average. The purple is 100 simple moving average and the gold is a 200 simple moving average. I will not make any trade calls or recommendations in this video. You do trade at your own risk. If you could please read our full disclaimer, which is on our website at www.mrcmarkets.com, and that will be most appreciated. Okay, let's quickly have a look at the forex camera. See what's already come out this week. So yesterday we did have a couple of bits of high impact data. These were the US durable goods. So the core is the high impact one according to Forex Factory. That came in slightly weaker than expected. The actual headline figure, the main durable goods, was much better than expected. The forecast was 7.8% and the reading came in at 22.6%. And we had US CBE consumer confidence data that was forecast 89.1, and it came out at 92.4. Today there's no high impact data out at all. Tomorrow overnight we have Aussie private capital expenditure quarter on quarter figures. We then have the German preliminary CPI month on month data at 1:30 GMT with the preliminary US GDP quarter on quarter figures. So the forecast there is expected 3.9%, the previous was 4%. And of course we have the weekly unemployment claims out of the US. At 3 PM with US pending home sales month on month figures expected a positive 0.6% compared to the previous the poor number, which was minus 1.1%. And on Friday overnight we have, so at 2 AM we have New Zealand ANZ business confidence numbers. There's no forecast figure there, so it's only based on the previous, which is 39.7. At 10 AM we have the Eurozone CPI flash estimate year on year, and at 1:30 of Canadian GDP month on month. So quite quiet in terms of data front. Of course it is the last all week of the month, so it's generally the quieter time, but there's still, you do get some interesting moves, especially right off the end of the month when the big institutions sort of bank all their positions, etc. You can get some interesting reversals in the market. Okay, let's have a look at the technicals now. So let's flip it to this Euro dollar weekly. Getting quite interesting now. It's really starting to aggressively sell off. Last week we had a very aggressive bearish candle. Remember, we've been speaking about this fib move for quite some time now. It was sort of holding that 50% retracement in the 100-week moving average, but you can see it got capped by that 200-week moving average, and it's just fallen down. It didn't get any sort of support at the 61.8% either, so we had an interesting weekly close below that 61.8 now. In terms of fibs, I mean, on these videos I try and keep it nice and simple, just the 50% and the 61.8% retracement. But another interesting fib low is the 78.6. So in terms of this fib move, I'll definitely keep an eye on this one. I think a lot of people will be as well. So that 78.6 comes in at 1.3013s, so just above the 130 handle. So of course that'll be a very interesting level as well. So that's why I think that 78.6 is even more interesting, to be honest. In terms of this bigger fib move, so I'm just going to zoom out here so you can see more clear. So that's pretty much the low of this chart to the high, to that most recent swing high. So low of 2012 to the high of 2014. I'm just going to zoom back in. You can see this 50% comes in at a similar level to that one. So it's the 1.3017. So I should draw that other fib back up there, so you can then see that 78.6 coincides nicely. You've got a sort of a double confluence level there. So that's very interesting to see, and of course I should draw 130 handle as well. mean, of course, we're still a long way away from that. Well, actually, no, we're not too far away. We're about 180 pips away. So you can see at 130 level to key line in the sand over the next sort of few weeks if it does continue to grind lower, which I would not be surprised to see it do. Bearing in mind we've got a weekly close below that 61.8. So the previous sort of, it did have some support around, or some resistance around there. So yeah, that I wouldn't be surprised to see that 61.8 act as resistance. And bear in mind we've closed below all these moving averages as well. It could quickly come down to that 130 handle. But anyway, that double sort of fib confidence level should be an interesting one. And in terms of the weekly, that is purely the focus, to be honest. On the daily chart, it's more tricky because there's not really many sort of clear swing highs or lows here, apart from obviously we had this move there. Remember that came off at 38.2. But so yeah, so in terms of sort of fibbing these moves, it's quite tricky on the daily chart. But the 4 hour is much more clearer, I think. I think you've got an interesting, I'd say that would probably be some sort of clear swing high there. Or maybe even this one here if you're a sort of shorter term player. Interestingly, what we have had here is a sort of, well, just lined up that fib there. You can see it lines up that 61.8. We had a gap open below here on the euro. You can see it a bit clear on the 1 hour chart actually there. Delete this so you can see it clear. So we had that big gap there, and it still hasn't technically filled all the way from its open. So do keep an eye on that. Gaps do tend to fill, especially on the euro, in my opinion. It doesn't have to fill straight away. It can fill whenever it wants, but do keep that in mind if you are sort of shorting the euro, because well, they just tend to fill. So just good to keep a sort of an eye on it and keep it in mind. So in terms of shorter term stuff, that's pretty much it. I mean, in terms of any sort of bounce up, I personally just keep an eye on the sort of the key round numbers. So current one that's sort of in play, it's been acting as sort of interesting resistance. There's 132s here. Key sort of line in the sand as we currently speak. You can see it quite clear there on the sort of 4 hour, 1 hour there as well. Some interesting spikes in the closes below. And yeah, that's pretty much it. There's no sort of, I mean, in terms of the 1 hour, nothing major to talk about really. There's no sort of obvious sort of fibs that are in play. It's just been so heavy that it needs a retrace first for it to sort of any sort of fibs to clearly sort of stand out, to be honest with you. Or ideally it'd be good if it came down towards this sort of double confidence level that we spoke about, and then you've got a key sort of long setup there definitely in play. Anyway, let's flip it to cable. What's going on? What we've been speaking about for the last sort of few weeks is a continued grind lower, and surprise, we've finally come down to this 50-week moving average now, and interestingly it did actually close below that. So you can already see this week it's trying to come above this 50-week moving average, but it's getting sold off by the sellers. You can see we've already had a small sort of upper wick already formed on that candle, so I'd not be surprised to see it continually grind lower. And this is the big fib that we've been speaking about, remember, pretty much in the low of 2013 to the high of 2014. That 50% comes bang on the 160 handle, so that's the big sort of perspective play. Of course, we're still some way away from that currently, but it's definitely good to keep it in mind. Of course, the 200-week moving average is pretty much flattening out at that level as well. So, cable looking very heavy indeed. Of course, I mean, it could get some sort of, in terms of this week, I wouldn't be surprised to see some sort of bounce up as it is at a key moving average. And then if it does, in terms of this weekly, then that'll be the fib to keep an eye out for, in my opinion. If you think it's going to continue, if you think it's going to come back down after a sort of healthy retracement of sort of 300 pips there. So that 50% comes at 1.68 to 69s. In terms of the shorter term time frames, so the 4 hour, even 1 hour, it's quite tricky. Similar, really. I mean, you had this key sort of base support low, which is held quite nicely at the 165.30. 35s, that held out quite decently. In terms of fibs, in terms of shorter term fibs, I mean, ones that have, yeah, I mean, that didn't even come to the 50%. It's just generally quite tricky, and also, especially when it's down so far, if it retraces up, I think you've got to be very brave to sort of be selling these sort of small dips here. A lot of people would have thought would be playing them. but I mean, as it's come down, especially in terms of this weekly chart here for about the last sort of 7 weeks, you'll be very brave to be shorting at these lows here, in my opinion. I personally prefer to wait for a sort of more healthier retracement towards the upside, and then sell. But I personally sort of rather buy any sort of a small retracement here, and yeah, just sort of play the sort of the retracement towards the upside here on cable. But yeah, in terms of sort of any fib plays that are in play, there's nothing there, in my opinion, in terms of sort of 4-hour or 1-hour chart there. You can see it's just starting to base a little bit. I wouldn't be surprised to see a small grind higher. Well, in terms of this 1-hour chart, definitely towards the sort of 200 SMA there on cable. Right, let's flip it towards the dollar Swiss on the weekly chart. What's going on? Surprise, surprise, we're finally at these moving averages now, the 200 and 100. Said a couple of weeks ago, looks like it wants to keep on grinding higher. Bearing in mind that this fib here, we're still nowhere near the 50%, so it's just grinding higher towards that. I think we had a key weekly close above these moving averages last week, so you can already see that they're starting to act as some sort of support here. Dollar Swiss has tried to retrace down, similar to sort of cable in a way. The moving averages are sort of holding it, and yeah, I think over the next few weeks we'll get a grind higher towards this sort of 92.68 on dollar Swiss. In terms of the daily chart, in terms of the fib moves, if we get any sort of retracement, I think that would be an interesting one to keep an eye out for. Bearing in mind the smaller ones have been playing out well, these other dips have been playing out very well. So we had that one here, remember the 50% came in, and then if you extended your high, extended the low, I think that was off of 38.2, so the next sort of swing low, I think, is this one here. It's a much smaller one, and you can see it clear on the sort of 4-hour chart as well. That 50% comes at 0.9102, so pretty much bang on. And also, you have previous sort of resistance around this level as well. You can see I'm sort of hovering the cursor over at the minute. Key line in the sand. So I think that'd be an interesting fib. And bear in mind, this previous 4-hour candle looks very bearish indeed, so I'd not be surprised to see it come down towards this level this week, have some sort of retrace. In terms of the 1-hour chart, nothing major to sort of focus on now. I mean, if you're an aggressive sort of buyer, there's been some interesting fibs here, so that was one there. And then if you sort of extend your high and extend the low, then yeah, this is technically a fib move to keep an eye out for. But I personally think we'll trace further down, so it doesn't really interest me. But there'll be there's nothing stopping that having a brief sort of a bounce up there, to be honest. If you could come and test this 61.8 and pop up maybe. That's just one example of how you can play the smaller moves if you're an intraday player. But in terms of key levels, it's all about this on this dollar Swiss, and pretty much all time frames to the daily. 4-hour and 1-hour there as well. That 0.91 is a big level if we do come down there. Right, let's look at the Aussie on the weekly chart. Still chopping around, but it's starting to base off these sort of the 0.9225s. You can see on this weekly, last few weeks had some interesting lower wicks. And it's just, I mean, this 50-week moving average is an extra sort of thing to say that I personally think it will sort of grind higher and it's sort of based. I mean, bear in mind to the upside, you don't really have a moving average at these highs here, but you do at the lows. So the odds just slightly favour the upside, in my opinion. I think we'll get grind higher towards this 100-week moving average. In terms of the fibs, high of 2013 to low of 2014, that 50% comes in at 0.9620s. So if we do get some sort of aggressive pop-up this week, then that's the one to keep an eye out for, I think. And in terms of the daily, I mean, we've been speaking about this for a while. In terms of all these time frames, the daily sort of 4-hour, 1-hour, it's all about just playing the range, I think. Because it's been playing out very nicely. Oops. So you can see there if I zoom in, you can see it has been quite choppy. But in terms of these sort of 50 pip increments, they've been very nice indeed. So 0.9350s there. And of course 0.94s. Interesting sort of choppy action there. Nice sell opportunities there. Nice sell up there at 93.50. So just a simple sort of way to play it as well. You've got the 92.50s as well. Key support, you can see there last sort of few weeks, that 92.50. So yeah, it's just been very, very choppy on these sort of time frames. So I'll just flip on the 4 hour as well there, but it's still plenty of interest in there. Keeping on sort of the price action, a lovely reversal candle there, 4 hour on Aussie off the 0.9250 is a lovely rotation towards the upside. Nice resistance candle there, and you can see it's sold off down to 92.50. So that's purely the way to play it on the short-term time frames, in my opinion. Because it's just been going sideways between all these sort of levels, so it's just a no-brainer. Right, that's the forex done. Let's flip it towards gold. Gold's starting to get quite interesting. It has been quite choppy. So this is the daily chart. This is the fib that we've been speaking about. Remember that, so initially it sort of held at the 50%, then it came back down to 50%, and another test again, and it came back down towards the 61.8, had a brief support, pops up, it then got sold off on a counter move here, remember. So then had some sellers come at the 50%, came back down, and then it held at the 1275 key support, and it's popped up, and now it's just in sort of no man's land really. Well, actually the fib to now keep it I mean, I think that the fib towards the upside is sort of broken, to be honest with you, because it was below that 61.8. There's nothing, it just hasn't been that technical. But in terms of the fibs towards the downside, I think this one is now the interesting one. So that we've taken the high from where we bounced off that previous sort of 50%, 61.8, and taken the new swing low. So this 50% comes in at 1297 spot 55. Also coincides with this sort of moving averages around here as well. So that's definitely the sort of fib move to keep an eye out for this week, I think, which I think will be a very popular move. Also has some previous support at this 1297, so previous support could act as new resistance. And on this 4 hour chart, the 100 simple moving average lines up with that as well. So interesting fib move to keep an eye out for there. On gold, that's pretty much it on gold. So that's the 4 hour as well. In terms of the 1 hour, if you think it's going to keep them grinding higher towards that sort of level, that's a fib move that played out on Friday, I think. You can see there, so that's the low pretty much on the 1 hour chart, that recent swing high, and you can see that 61.8 with a nice sort of reversal candle there. Pretty much support to the pip, and it's just grinding higher now. So that fib is currently in play, and I think that will personally grind higher towards that 0% at the 1290s. Okay, then that's all for today. Hope you found that video useful. If there's any other pairs you want me to take a look at next week, then feel free to comment under the YouTube channel or send us a tweet to our Twitter feed, which is at MRC_markets. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.